I'm Greg Hunter. Welcome to USAWatchdog.com. Well, this is a real treat, something I've never done before. An interview with two guys at one time because they're both got a lot to say about the gold market. I think it's just really been clawing its way up. It's in the mid 1300s or so, a little bit less, maybe 1340 as we do this interview. A hero whistleblower, Andrew Maguire, who was one of the original whistleblower about all the manipulation and all the leverage in the market. Also, Tom Coughlin, CEO of Kinesis. And we're all going to talk about how we're going to break this ridiculous stranglehold, which for years people said, anybody that said the gold and silver markets were manipulated, they were wearing a tinfoil hat. Of course, now they've pled guilty to all kinds of crimes and manipulation in the gold and silver market, multiple banks. And let's bring them on. Tom, Andrew, thanks for joining us today on USAWatchdog.com.
It's great to be with you, Greg.
Well, let's talk about how we're going to break this stranglehold where we don't have any honest markets anywhere. LIBOR, the futures, Forex, gold, silver, as you know. But you have a new product coming out, Tom and Andrew. Let's talk about your brand new product that is coming out that you're going to be talking about. Brand new product.
Yeah, sure.
Yeah.
What are you talking about? Crypto, a gold, a crypto blockchain type gold that pays a yield?
That's correct. Well, I'd actually classify it as a system. It's a monetary system that we're introducing. It's called Kinesis. The reason why it's called Kinesis is we've designed it in a way that it actually stimulates the flow of money. So obviously we're talking today because we see ourselves as reintroducing, the gold and silver standard through this monetary system. But there's a number of challenges to be able to do that, and we've focused heavily on trying to combat those challenges and be successful at it. So, I mean, I can delve into, exactly what we've done from the very top if you'd like.
Well, just briefly, how does it work? How will people use it? I know it doesn't roll out fully until October of 2018. So just briefly, how does it work?
Yeah, sure. So what we've done is we basically put gold and silver currencies onto the blockchain. And then we say that we've kinetically charged them to make them move. We've basically focused in on what makes money successful, and particularly what makes money successful when it's not legal tender. Right, and there's a number of challenges there. So initially, what makes money successful? It needs to be an efficient medium of exchange and effective store of value. So by obviously adopting gold as, say, a currency, it's the greatest store of value that the world's ever seen. Appreciated in value and as a currency, and independent civilizations across the world for thousands of years. That's undisputed. It's very stable, secure. You put it into, a quality assured environment, and you can build a lot of confidence around it. So we've got the store of value sorted by backing it by gold and silver. With the efficient medium of exchange, what we've been presented with technological evolution and development is the ability to create a monetary system that empowers the people through the blockchain. So it's like a decentralized, anonymous type system where one person can transact with another person outside the ambit or view of controlling central planners, for example. So you can effectively develop a system for the people and then make it highly efficient, because what the blockchain does is creates a trustless system where one can interact and transact with another without knowing the other person and understand that the transaction will be settled.
Okay, and let's get Andrew in there. Andrew, this is a game changer for the world, but it doesn't roll out to October. There's actual tonnage of silver and gold backing this up. Is that right?
Gram for gram, Greg, and I think this is the interesting part about it, is that we all know that the paper markets are have reached sort of leverages areas. I mean, you mentioned earlier 500 to 1. We actually more estimate it's much closer to 1,000 to 1 when you account for all the derivatives. And, you know, a lot of people have been recently asking questions about exchange for physical. Look at these massive flows. I mean, we're talking about thousands of tons of silver, literally this month alone in March, in the last 18 days. We've seen something like 5,000 tons of silver exiting the system. Well, that's just not plausible, as we know. So where is this going? You know, where is all this exchange for physical gold going? It's going into, it's by the time you net out the average gold purchase, for example, in London, both aggregated fixes are maybe 3 tons? Used to be 7. But it's reduced to about 3 tons because liquidity is flowing into the physical markets in Asia, and so and through exchanges like the allocated bullion exchange, which provides alternatives to London. But so what we're seeing is something like a difference between the exchange for physical that comes out every single day from through the reported CME reports, and the difference is about 29 tons. That's a hell of a lot of gold. 29 tons rolls off the tongue as if it's nothing. 29 tons of gold is unaccounted for, and that is, I'm talking about an exchange for physical coming out of the COMEX and even accounting for EFP flows or into GLD or iShares, still about 29 tons that is totally unaccounted for.
Is that per day?
Per day, per
wow.
single day. So, you know, where is this going? And you know, we even think 1,000 to 1 is probably, it's not out of this realm. And so where is it going? Well, I did some research this last week, and I shared this with some people. If you look at the Office of the Comptroller report, and you look at the conditions for getting away with, essentially, for not reporting, the too big to fail banks essentially have to report to the Office of the Comptroller that they're not leveraging to a degree that is going to cause the taxpayer issues. However, there's some little clauses in there which say you don't have to report anything that's less than 14 days, that has an expiry of less than 14 days. So what we're seeing is these exchange for physicals flywheeled into a paper market that is then rolled into a forward of a duration of less than 14 days and then eternally rolled. So, you know, we are dealing with a major situation here. So
sounds like really, it sounds like a major crime. It sounds like just major manipulation continuing.
Yeah, it is, but it has to be, you know, to the degree that this has to be getting a free pass. There's only one institution that could possibly get away with doing with dealing with that kind of volume or flywheeling that kind of volume, and that would obviously be the Bank of International Settlements. So, you know, which is the central bank of central banks, and each end of month at 3 p.m. likely close to $1 trillion worth of derivatives expire at 3 p.m. on the last Friday of each month in London. And we always see, and you'll see it again, you'll see a decline in the price into to their sweet spot, so to speak. That's a lot of paper gold. Now, the trouble is, other competing governments are actually aware of this game and are playing this game. Why would you chase a price when you know that somebody of size is going to defend a derivative position that's underwater? So you simply wait and buy. And then, but here's the thing about kinesis, though. I mean, we're talking about a market that is at the margin, so tight. This physical paper market balance is already at the margin. And due to the immense and unprecedented paper market dilution we're witnessing right now, real competing physical demand forces discipline on the paper market, and it raises the point where the lines cross. Now, Kinesis launches, think about this, with the power of adoption. Now, Greg, I sent you a couple of links there. One that links to the Indonesian Post Office and the adoption also of 100 million Islamic groups called NU. Now, these have adopted the Kinesis currency. Now, if we're talking about volume, we're talking about enough fresh physical demand, and I say physical demand, which is going to do the paper. It's going to move into the paper. In other words, what's it going to do to the paper market? It's going to raise the offer to sell immediately deliverable physical gold, and unlike the COMEX or the over-the-counter spot gold markets where hundreds of tons are cleared versus the tiny 3 tons we just mentioned are delivered every day, physical gold will be lodged and ready to back the Kinesis currency gram for gram, and in turn, every cent, pound, euro, any one of the major global currencies that Kinesis currency will be instantly convertible into. So this is a game changer.
What do we have now? What do we have with the price now in the mid 1300s? Where do you see the rest of this year? I mean, you guys got a long way to launch. Well, where do you see the price of gold in the markets happening now? They don't want to lose control of this. The powers that be, the central banks, the BIS, the Bank of England, the Federal Reserve, they don't want to lose control of the price of gold because it all makes their currencies look terrible. What are we looking at between now and your October launch with the price of gold? Andrew, let's go with you, Andrew. Go ahead.
I'll let Tom add in his comment there. But I think what we're saying here is that we've already seen an inordinate amount of leverage. How far can you create dilution? It's not as if the control lays with any one single central bank anymore. Now, let's not forget that we have competing central banks who value the physical product. And what we're seeing is, over time, we're seeing the liquidity, the paper market liquidity, flowing into the physical markets. Now, for example, you want to sell gold on the Shanghai Stock Exchange, the Shanghai Gold Exchange, you have to, novel idea, you actually have to have the physical deposited before you sell it. Now, essentially, what's happening is we're seeing the paper market now diluted to the point where somebody's going to take advantage of that price. And that's exactly what's happening. And we're seeing stair steps higher. Although each and every month we just described how we see massive interventions to protect derivative positions that are underwater, and they're talking about official ones, but essentially that leverage reaches a point where you either got two things. You either got the offer to sell physical gold diverging from the paper price, which illustrates you've got a broken market, or and so really, it's basically, that's the bottom line of it. You can't have both. You can't have both things. You can't illustrate that the paper markets are broken. What I think is going to happen is that the Kinesis is going to be very assistive in raising the offer of physical gold price, which is actually going to force either more dilution from the Fed or from the BIS or from officials, which then be capitalized upon by the physical market. So I think we've reached those lines where the point where the lines cross, and I think that we're now in the end game, and I think that Kinesis is going to just completely disturb that very fine balance that we're seeing at this point.
So this is why we have this this kind of a stair step upward. It was up 11% in 2017. It's been having pretty good years so far. You think, have they already, fellas, just some quick answers on this. Do you think, Tom, they've already lost control because they don't want 1350 gold?
Not necessarily. I mean, this is obviously very political stuff, which I normally like to stay away from just to ensure my survival. But I think Andy's going to do his best to threaten that. But
have they already lost in a form? Have they already lost control in a way?
Not necessarily. I mean, my view is that they will control until the very end, until you basically get a market failure or a default to delivery. There's already plenty of defaults to delivery going on right now.
Wow, I did not know that. So that's going on right now.
Yeah, they're going on right now, and they say, oh, delay in delivery, but ultimately what it is a default in delivery, and there's a lot of minting of brand new bars going on out of the London pool, right? So why is there a delay in delivery, and why is there a 2018 stamp on the bars, right? It's because it's freshly minted and it's going through the refinery. So who knows how much is there at the moment. There's basically no silver, that's for sure. That's where the major delivery delays are coming from, and it's all freshly minted. So that's the sort of picture that we're looking at. They'll control it until the very end, until there's a market failure, and until you see basically a very significant price differential between the physical price and the paper price. We're actually offering, obviously this is a game changer of what we're doing in the institutional markets, and then also in the monetary space as well, which is both institutional and retail. But we're offering a product as part of Kinesis, actually, that will be on the blockchain. It is revolutionary in its own right, just as a product. And that is actually, it's a pairs trade, right? So pairs trader goes long one market, short another market. So we're actually, this pairs trade, what it will do is it will price the differential between the paper market and the physical market. So what it does is go long physical, short paper, and it'll price it. So at the moment, the paper and physical market's very close together. What this does, it allows for a market neutral trade to be entered. So, okay, I'm long one market, short another market. Pretty small risk there, right? Even though it's a little bit of a complicated product, but it allows for investors to get into that trade and bet on the differential. But what it does, it puts massive diverging forces into both markets. So I'm going long physical, so it's squeezing the physical market, it's taking that physical out of the market, and I'm going short paper. So basically the two markets have these two massive diverging opposite forces on them being entered. And we've got institutions wanting to throw billions at this, not millions, billions, because they see the opportunity and they're betting for a market failure. Normally I like to
let's work on, well, I'm going to interrupt you right there. They're betting on a market failure, and I want to make sure I get that. So you guys are thinking that you talked about that they're going to run it until they have a market failure. I've heard this market failure. How close, Andrew, are we to a market failure?
We're very close to a price reset. Let's think about it, Greg. What is a price reset? It is no more than settling all these, that's close to $1 trillion worth of derivatives that are underwater, unable to be delivered. It is going to be a simple paper market reset. And I suggest likely it'll happen on a Friday. You'll see a market close on a Friday. There'll be a non-default readjustment of a price for Monday morning. And it'll simply be the physical price. And anyone who's in a paper product...
how big do you think that'll move? I mean, you're talking about going. Let's say this weekend. I don't know if it's this weekend, but let's just say you're saying that you're going to go to this weekend at 1350, and then on Monday, what kind of a reset are you talking about percentage wise?
It'll be now. What you're going to do is go into a bid-only market at this point. There's not going to be any offers to sell gold when people wake up on a Monday morning, and the price is going to be the price. Now, what is the price? The price is there's a lot of above ground physical gold available. There's years and years, decades and centuries of gold above ground. But what is the price that someone's going to want to sell it for? So in other words, what are they going to offer it for? Well, logically, you're not going to offer it at 1350, are you? You're waiting for the price to establish itself. And you're going to go bid only because number one, you're going to see all the paper market guys left on the sidelines, and they're going to want to jump back in. And look at a pension fund. What about a pension fund that's invested in 10 million in gold in 1998? Suddenly, on the side, because they're unallocated gold, they're on the sidelines. all the protection, all the hedging that they bought is gone. So, as I say, what is that price going to be? God, Craig, I would not try and even guess what the price will be.
Could it double over the weekend?
Well, it could easily be, and I'm not going to guess on a price, because I mean that would just be pure speculation. Whether it's $2,000 an ounce, whether it's more than it was in 2011, if quite plausibly. But I think, we're talking about timing here as well. There are already people front running this kinesis gold-backed currency launch. Yeah. Now, look, I know of 2 investor groups who formed a consortium right now to buy physical gold right now ahead of what they know is a physical price reset.
And is this why we're seeing the price claw its way up? Is this why we're seeing, because it just seems like they can't push it backwards? Is it because of your kinesis technology and this run on gold going higher and higher? It's institutional investors who are buying it. Is that why the price is just slowly climbing up? Everybody's taking a position?
I wouldn't say, Greg, that it's us yet.
Okay, but is that why? But either one of you guys, just some short answers here. Is that why the price? Because I can't figure out why the price is going up. There's plenty of coins in stores, pretty much.
I think we just need to look at the market and appreciate the market for what it's telling us. Whether it's us or whether it's someone else, there's strength in the market. You see sovereigns buying, taking physical liquidity out of the market. Ultimately, what this is all about, and it's very difficult to speculate on price if you actually get a paradigm shift in systems that actually price the stuff, to actually take it from a market that's unlimited in supply to a market that's very finite and limited in supply. Like, you're going to get a massive pricing reset. What it's going to be, no one really knows, right? Who knows? You can see what's going on with sovereigns at the moment, with Russia, China, basically buying up and trying to pull in power, basically selling their oil and gas for physical gold, bypassing the US dollar. It's very, very political what's going on, and it's a shifting of power, right? That's probably the main reason why Russia's being villainized at the moment for literally everything.
Good. And this failure, Andrew, let me just ask you, I'm trying to move this along. The failure you're talking about really is a price reset. When you say failure, you're talking about a failure of the old price and a new one reset. Is that what your failure means? Failure means price reset. Is that correct?
Yeah, it means price reset. Yeah, and what is a price reset? Is we're just trying to describe. It is not going to be deemed as a default, because all they're really doing is settling for cash what they're able to settle for cash, which is paper gold positions in unallocated form, in any unallocated form. So, which is the bulk of the derivatives that we're talking about. So, who's going to be on the right side of this market? You can bet your life it'll be the same insiders that are always on the inside of this market. Then you're going to see a gold price that wants to appreciate.
And little guys should go ahead and do what the big guys are doing in a smaller way. Buy some coins, buy some silver, buy some gold. You said that both you guys, I've said this a lot, that the silver the silver hoard, the silver availability is minuscule. It's really dried up. Would you be a buyer of silver and gold in the physical if you're just a guy watching this interview that needs to spend $5,000 on some gold and silver?
I wouldn't just be a buyer. I would set my whole entire macro strategy to actually being completely exposed to the space, like what I've done and like what Andy's done. We have had this vision for a very long time and have gone about actually practically and pragmatically making a change in the market, liberating the market from its extreme oppression and suppression. And we're on this show to actually communicate to your viewers as well that there is a way that they can participate in this liberation, and it's by supporting Kinesis. And I hope that you can look us up. We're kinesis.money as well. please look us up, have a read of we've got a document called a blueprint. It's basically the blueprint for the future of money. Now, there's one thing about the gold market defaulting and this and that. That's going to have very, very significant ramifications for money in general. I mean, what it's going to do to fiat currencies around the world, particularly the US dollar, is going to be something really astounding. Everyone needs to be prepared for it. Of course, we don't know exactly what's going to happen in the future, but we are providing the mechanism and facility for people to participate in a person-centric revolution. And if there's going to be any change, it has to come from the person. It's not like we're going to see a government implement widespread policy changes, no. But there's historical precedents for this kind of revolution to happen. I mean, actually, I put a historical precedent from the Hanseatic League, where the pound sterling came from. This is commonly accepted. The pound sterling actually came from an organisation back in medieval times called the Hanseatic League, who refused to accept nation-state currencies because they were being devalued and debased. So they created their own currency. Eventually, merchants in nation-states stopped accepting the government's currency and were accepting the Hanseatic League's gold-backed currency. And this is what we're doing now. We're creating a system whereby people can actually use and also be rewarded for using this currency. And we can start this revolution ourselves. Little by little, we can make this thing go viral and we can get everyone using it, and then we can force the hand of even governments eventually to participate in this thing and for the sound and fair money to come back into play.
Let's talk about the petro yuan real quick. It launched yesterday or Monday. It had a big day in the stock market. The dollar didn't go down very much. What does the petro yuan mean to the U.S. dollar? Is this just more dollar negativity?
Oh, absolutely. And I mean, really, you're talking about the end of dollar hegemony, aren't you? I mean, that's the bottom line of it. And you can analyze it in any way which you want. Call it petro yuan, call it petro gold if you wish. Obviously, yuan is immediately convertible into physical gold, and whereas the US dollar is not. There's too many alternatives for paper. So I think it's the death of the US dollar. I think what we're seeing is the natural shift in what was really a very clever, what we call the art of war. Sun Tzu, the art of war. China has a 1,000-year plan. We run with 4-year plans, and we're willing to screw everyone within those 4-year plans. So yeah, absolutely. But you know what? I think, Greg, one of the things that really, you're talking about adoption here. What is capital looking for? There's billions. We've been approached. We haven't even done any marketing, Greg. There's billions of dollars worth of global capital looking for favorable and comparable risk-return metrics. And this is something that Tom has been talking about a lot recently. And the yield Kinesis currency presents is attracting capital from all different asset classes.
Banks used to pay a yield.
Huge.
They used to pay a yield in bonds, a real yield minus inflation. That's what you're talking about. You're talking about a new, not just a currency, but a new system. I mean, where the banks are going to be called out and their currency is going to be called away, and you'll actually get a yield on holding money again, which you don't have to do all this risky crap in the markets.
It's actually quite expensive to hold gold. I mean, you need to pay for storage, and there's quite often a premium, etc., associated with it. It's just expensive to hold gold. So what we've done, we have stripped away everything. There's not even any storage fees with us. In fact, you actually just make money by holding gold. And you compare that up against, basically negligible to nil interest rates around the world. And you've got a very attractive looking investment from a risk to return perspective. As soon as you attach a yield and you want to talk about price reset, a yield has value, right? That's how companies are valued. They're valued based upon their dividend potential or their yield.
But I got to ask you guys something. I'm going to interrupt. Yes, I agree with you. Are you worried about the governments coming down on you? I mean, you're cutting into their game, dudes. I mean, you're going to be cutting into their game. Are you worried about them attacking you? Andrew, I'll start with you. Are you worried about being attacked? Are you worried about your, and I don't mean to sound awful or draconian, but are you worried about your safety? I mean, you guys are thinking big here. Big, very big.
Yeah, I think I'm not. I'm not in the least concerned about safety. I think this is a natural evolution. I actually think that the jig's up anyway. I think you're talking about a reset coming up anyway. I think you're going to have central banks now competing with each other to be long gold. I think we're actually going with the flow. And I think, as Tom just alluded to, we're going to have governments supporting what we're doing. Certain governments already are supporting what we're doing. Obviously not this government yet, or our Western governments yet, but there are other governments outside of the West who've already expressed interest in adopting kinesis.
Fellas, I'm going to leave it there. That was a great. I'm very happy you came on to USA Watchdog and talk about your new system. Doesn't happen until October. We got some real dicey waters between now and October, do we not, fellas? I mean, we have some very rough sailing. There are war drums beating in the South China Sea. The Russia, the UK with the poisoning, which the Russians they deny the capturing of the uranium in the United States with Russia. I mean, we got a lot of headwinds going up, don't we? Do we not? Just the short answer about your appraisal of what the world is looking like right now. Tom, how about you?
Certainly very interesting times. Yeah, I mean, let's see what happens. The most interesting on the political side is obviously Russia. I'd be very interested to watch that space and see what happens there. Meanwhile, they continue to accumulate more and more gold every month. So that's also very interesting. Let's see what happens.
And Andrew, what about you? What's your appraisal of how would the war footing apparently in the world it appears to be? How does this affect the price of gold and affect your outlook?
Extremely bullish. Obviously, every we're talking about the oil for gold scenario a minute ago. Every single government that's ever attempted that has been either bombed into oblivion or assassinated. Obviously, you can't do that with the likes of Russia and China. And I think we're seeing a lot of foot stamping at this point. Pathetic foot stamping. The jig's up for the American dollar. I think as a hegemony. I think obviously it's not overnight, but it's happening, and I think you're going to see gold has to appreciate in this environment.
Thanks so much. We really appreciate you guys being on. It's Tom Coughlin and, of course, Andrew Maguire, the gold expert and whistleblower extraordinaire. Fellas, wish you much luck with your project, and hope you guys come back again. Thank you for joining us today on USAWatchdog.com.
Thank you very much.
Nice to be with you.